Hey, welcome back, everybody. So here's the funny thing. The Fed rates actually came down 0.5 point, which we kind of expected. But if you watched last week's show, you also knew that there was a high probability that rates were going up. And that's exactly what happened. So let's talk about that. And we'll talk about our metrics and what's going on in the industry. All right, hang on. Okay, so here's the funny thing. And people think that I was kidding when I said, hey, it is not uncommon to have the actual long-term mortgage rates go up when the Fed rates came down because, again, the Feds do not control long-term mortgage rates. Those are traded online. They're mortgage-backed securities, and they adjust every single day, multiple times during the day, because they are on the stock market. All right. So if we pop over and we take a look at this, it says, look, mortgages are based on bonds, and bonds can move continually every day. In contrast to that, the Fed funds can only move once every 6 weeks. Okay. So even though we have long-term mortgage rates, which are, again, can go up and down every single day, the Fed rates don't. And if you think about it, and let me blow this back up again, the bottom part here says the Fed funds rate is like a one-day loan. Really no better way to say it than just like that. It's a one-day loan. Whereas your mortgage rates, well, those are 15-year, 30-year. Sure, there's 5, 7. There's all different kinds. But those are considered long-term. Fed rates deal with your HELOCs, your home equity line of credit, right? Your credit cards. In fact, it's so funny. Somebody just showed me their new revised APR, or if you carry a balance, it was like 31%. I can't even imagine that. Holy moly. Anyway, I guess don't use that credit card, huh? Or at least don't keep a balance on it. So the funny thing is, what banks lend to day, that is what the Feds control. Commercial lending. That's the value. So, multifamily, 5 units or more, commercial spaces, things like that, business loans. That is what the Fed controls. And that is a completely different game. Now, they can affect, like they did, Fed, the rates that we saw that happened on Wednesday, because we forewarned you, and there's a couple of folks that capitalized on and said, hey, I'm not that big of a risk taker. I like these rates. I'm going to take it, which was super smart, because the ones that didn't, they actually lost 2, 3, 4 basis points, 0.02, 0.04% in rate that actually went up. And that's not very pleasant. Now, yes, things adjust. Yes, we expect them to come back down. Yes, we're still lower than where we were at February of 2023. But understand, all things considered, hey, you've got a lot of things that are happening. And if you want, make sure that, request our financing. I am not a mortgage lender. Okay. I'm a real estate broker. But we make sure that you get good, solid information, which is probably the most important thing. Now, let's take a look at some of our top headlines that happened this week. Yes, mortgage rates finally did move higher after the Fed cut the rate. And there were a lot of folks that were kind of caught on flat-footed on this, and they need to watch the show. So make sure that you like and subscribe so people can see this. You can still see, however, on our chart on the right-hand side, the 30-year mortgage is at 6.15, a little bit higher. It was 6.9 earlier, 6.15, or 6.09, I should say, and then hit 6.15. But you can still see that we're in a downward trend, along with, again, we're still seeing the lowest, mortgage rates. We're getting in the bottom right a lot of questions. Should I refinance? Again, it's a free calculator. Use the free calculator, people. The link is included down below. There's no login. You just click on the link and you go to the calculator. They can't make it any easier for you than that. The benefit of the calculator is there's a lot of folks that have mortgages in the 7s. And, the question is, hey, is now a good time to do a refinance or a cash out refinance or something along those lines? Definitely something worth looking at. And again, it's a free calculator for you guys. So, make sure that you delve into that, right? Okay. Now, if we take a look at other mortgage trends, let's take a look at Freddie here. So Freddie is a running, basically they update every Wednesday. So it's super helpful for us, but you can see that we have, on the left-hand side, that was basically, earlier this year, and you can see where we were spiking. And then, of course, came down the year before that. We were up into the 7s, which was about February. And then, of course, we, again, dropped back down again. So as we are taking a look at rates, okay, how does that translate into what's going on in our market? Because that really, at the end of the day, is the next most important thing. Because when we take a look at new listings that came on in the average of the last 7 days, you got 1,373 versus 1,445 homes that went pending. Okay, so wait a second. For every home that's coming on market, we have one home going off market, right? It's like 1.02 or 3, right? 1 for 1. That is telling us that we are more of a balanced market, okay? We're at about 2.3 months of inventory, and that bubbles around between 2.3, depending if it's a Friday or not. Friday is a big list date. So are we still seeing a very healthy, balanced market? Yes. Are the interest rates enough that the absolute pent-up demand for buyers is there? No. However, seasonally normal, if we mirror like what we did last year, which we are very much in that direction for rates, then we're going to see a little bit more activity starting up, not this weekend, but the next weekend, as people have acclimated and taking their last bit vacations. Kids are back in school. College students are back in school. All of the life kind of changes coming to an end as people prepare for the upcoming colder months. And we see a big surge. I shouldn't say big, but we see a surge between now and about the middle of December. Expect it. If rates come down and actually bump into the 5s, which I think they will hit the high 5s, in and out in Q4, more out than in. I think we're going to stay closer to the low 6s. I think that, we're going to see some more buyers coming in. We're still seeing a very nice activity. We're still maintaining our inventory. All right. So if we pop over and we take a look at this, if again, you like super awesome information that is free and accurate and consistent every single week, subscribe, like, ring that little bell for us, and just tell people that you like what you see. All right. So let's stop over and take a look at what is happening year over year and year to date in pricing, okay? You might say, George, what the heck does that mean? All right, super simple. If we take a look at the top line, when we take a look at our year to date, you can see that our top line, the average list price is $1,029,000. And last year was about $1,045,000, so we're down, it says 1.5%. Pretty small. However, the bottom line is where the tire hit the pavement, and that's where we have basically the same. Last year we were at $776,000. This year we're at $846,000. Month over month, again the same, $835,000. A little bit less than what we were at, as far as numbers, as far as year to date, but not by much. Pretty much what we look for there is just that constant trend. Now, understand, this is all of Washington State. Okay. And when we take a look at that, though, it gives us a solid metric each and every week to say, hey, what's going on? What are interest rates doing? What is volume doing that's coming on? What is volume that is going off? And what are our sold prices? And what are we seeing there? And we're seeing a very balance in our numbers. We're not seeing crazy prices going up, although we are number 3 as far as a sweet spot for relocation in our area nationwide. And when we take a look at actual pricing, we're seeing a lot of stability. We're not seeing some of the price reductions that they're seeing in Florida or Texas and Arizona, and which I don't even think Arizona is seeing that much of a reduction. Some of my friends down there that I do business with, they're saying things are going crazy still. Interesting. Anyway, moving on. So if we take a look at the actual, let's blow this up here. So we take a look at our actual volume, okay? And let's go one bit bigger here. When we take a look at the year-to-date sales are up 1.3% year over year, meaning we have sold more homes this year than last year, which is excellent. A lot of that's due to rate. And then, of course, pendants are up almost 3%. And that's a big deal. And the reason is that we're starting again we're continuing to see that pattern. Why? Because rates have normalized where they should be. Buyers are acknowledging the fact that, hey, this is going to be pretty normal. They're a little bit lower than where norm is. They should be closer to, the 6.75 to 7, my humble opinion, as to what we've seen more of a balance. However, we're still seeing some really good numbers. And so even when we take a look at it month over month, look, this month over, for the month of September over last year, oh my gosh, we're up almost 26%. That's a pretty healthy number, all things considered. Even though our numbers are relatively small, and even the pendants are up, which is actually a really good thing. And including solds, I should say, are up. It is a good thing because, again, it shows that consistency that our market is doing quite well, and we are quite healthy. We are not swaying either one. So if we have this chart, right, this is absolute seller market, absolute buyer market, we're probably here maybe a little bit more seller than buyer, just a tad, not much. Anyway, there's pros and cons on the homes we've been negotiating. Neither the seller nor the buyer have had any significant leverage either way, which is actually very helpful on both sides. So just keep that in mind. All right. So let's pop over. Let's talk a little bit about, yes, you guessed it, new construction. Now, this week, surprising enough, we actually have seen some really good numbers come out of our new construction, right? And we've seen an improvement, basically month over month. Even though we're down about $12,000 last week, the average sold price was $914,000, and the average sold price this week is $902,000, or about a $12,000 swing. And that could be for any number of reasons, and including product points of what's selling, because we had a massive amount of inventory that came in. It was lower, that is competing with the existing, what is already higher, depending on which county you're in. And so all things considered, those numbers aren't crazy at all. They're pretty much right in line. And in fact, when we take a look at just the sales volume itself, you can see that we're actually up, whereas last week, sales volumes were still heading in a downward trend. Let's pull this up one more time for you. They were down in a downward trend, but we're up 0.2% as far as pended, and the sales are actually starting to catch up with that. And so when we take a look at it, and you're like, George, okay, percentages are great. In fact, this is one of our clients that said, hey, percentages are great, but what the heck? What are the numbers? Okay, well, that means that we had a few less homes that came on market, 13 less for the month, 24 more homes sold than this time last year, and 20 homes more went pended than what we saw for the same month last year. Not a big deal. Again, everything's pretty small. This is all, 3/4 of Washington State. Those numbers are pretty small. In other words, they're bopping along, but at least they're not heading in a downward spiral. They're starting to do a little course correction, heading in a little bit more flatter, and some of that is because of the incentives and whatnot that are being offered. Simple enough, right? Okay, so let's talk about the ugly stepchild. Hope nobody has an ugly stepchild. Not relating that to them in any way, shape, or form. So when we talk about that, yes, we do have our wall of shame. Yes, we have some new ones, but our inventory actually did go up. US Bank and Lakeview, which are big mortgage servicers that have seen what we will consider in more of the, I don't know. We'll see a lot of US Bank and Lakeview down south or up north. A lot of them do USDA type loans, which are more urban loans. So we're seeing, parts of Tacoma, Puyallup, Sumner, Olympia, areas down south or north of Marysville. We'll see more of those types of things. In the core areas, we're not really seeing much at all. I don't spend too much time on the other side of the mountain because, I don't practice over there. So when we take a look at actual inventory, yes, we're seeing a few more that came on. However, it's nothing crazy at all. So if we blow this back up again, and let's shoot over to our bigger numbers. We actually had 80, so we have roughly about 23 that are not really foreclosures. Whatever. And then, of course, as you can see, our numbers actually, as far as the same month year over year, our numbers are down for solds and up for pended. But our inventory has creeped up just a tiny, tiny little bit. Nothing to be crazy about, nothing that we're even worried about. Not unexpected this time of year seasonally, because we do start to see some of those roll through. Those will fall off as we head into October and whatnot. Banks politically don't like to typically foreclose between November and December, and they will push those off until December, February. Better time anyway, keep the house or January, February, I should say. Keep the house occupied and warm and whatnot. Anyway, if you have any questions, put them down below. We love your feedback. Remember, subscribe. Tell us what's going on in your life. If there's anything that we can do to help you out, hey, let us know. Why? Because we're here to help. There's no selling here. Tell everybody that you know that, hey, if you're looking at buying or selling, you need to watch this show. Why? Well, because it's fun and because it's not pre-recorded. It's all live. So when I make a mistake, I have to correct it live. In the meantime, have an absolutely fabulous weekend. You guys have a great day, and I'll talk to you later. Take care.